Hi guys, welcome back to this Money Control live stream. You're watching Closing Bell with me Nandita, Khemka and my colleague.
Hello there, I am Yatin Mota.
Well, it was a fairly volatile session, Yatin. At one point, we were looking at breaking below the 24,500 mark as well, but managed to stage a good recovery from the day's low. In fact, we did end above that 24,600 mark, but an extremely flat close on the index, Yatin. We have been struggling for direction for the last three sessions. 24,800 on the upside seems to be a very crucial zone for the Nifty to stage, a good rally here on and perhaps make a dash at that 25,000 mark. But that hasn't really happened, Yatin. What is it that's spoiling the mood?
So I think, the global factors are at play. I think the China Politburo meeting, last time when it happened, we saw a good FI outflow. This time, obviously, the markets are more aware, more prepared. So nothing really to complain. And usually, Nandita, if you see yesterday's figures or last few days' figures, FI has been net buyers. Domestic funds have not been that supportive. Most of the mutual funds data has come in, which indicates that the flows have remained almost flattish on a month-on-month basis for the SIPs at least. And in general, there is some bit of slowdown in flows. But still, a very large pie of Indian investors are willing to invest even at current levels. That is probably one, silver lining for the markets. So, but yes, the markets have been quite, volatile in the last few days. The volatility will remain, but I think stock-specific action clearly continues on Dalal Street.
That's true, Yatin. Stock-specific action continues, but another silver lining is the fact that the broader end of the markets have continued to outperform.
Correct.
And 13th straight session of both the Nifty mid and small cap indices ending in the green, which is a very encouraging sign, right? Aside of that, if you look at some of the pockets that did well today, the Nifty IT pack managed to hit a fresh high, Yatin. Ever since we saw commentary coming in from US Fed Chairperson Jerome Powell about the strength of the US economy and the fact that they will be, turning somewhat cautious on interest rate trajectory, but another rate cut is coming perhaps in the month of December, which means next week itself. There could be another 25 basis point rate hike, a rate cut, I beg your pardon, an 85% chance of that happening according to the Fed CME watch tool. So yes, that boding well for IT pack, and HSBC also came out with a good report yesterday, and IT stocks have been extending gains ever since today as well, almost a percent higher on the Nifty IT index, all-time high on that index. Most of the sectors were in the green today, Yatin, even though the benchmarks were struggling for direction. Realty, PSU banks saw good traction. Even the Nifty bank index saw good traction, right? We have a new man at the helm at Mint Street, right? And, given the kind of pedigree and given the kind of experience he has, the street has taken heart from that. And of course, we saw a 0.3% kind of a gain coming in on the Nifty bank index as well. In terms of individual movers, you had some of the NBFCs doing well today. Shriram Finance, Bajaj Finserv, HCL Tech, Wipro, Infosys, tech names dominating the gainers list, and even the stock like SBI was doing well, which pulled the Nifty PSU bank index higher as well. On the flip side, Airtel top laggard, Adani Ports, HDFC Life, life insurance data came in yesterday. Not all that encouraging, although ICICI Pru managed to stage, managed to hand in good figures, but rest of them were fairly muted. Dr. Reddy's, Adani Enterprises, these were some of the other laggards. But as you mentioned, stock-specific action in the broader end of the markets, which were the ones that caught your attention.
So I think after the Amphi data came in, some encouraging moves coming in for NAM India and Nippon Asset Management. That stock continues to move in trade, 10% higher for that one, and similar gains coming in for Raymond's also, stock touching that 1800 levels. Stocks like Vara, Clean Engineers, all of these stocks are doing well in trade, 7-8% gains coming in. What did not do well is clearly see it after yesterday's 10% kind of move. Today the stock saw some profit taking, 6% down for that stock. MapMy India continues to witness profit taking, 4% down for that stock. VIP Industries, Just Dial and Route Mobile are the other stocks which saw some profit taking at high levels. But clearly the mid-cap IT stocks are in flavor. We have stocks like LTIM, Emphasis, BLS International, Persistent Systems, even HCL Tech or Wipro for that matter. Those are the stocks which are at new 52-week highs. So good momentum seen in the IT stocks. Also stocks like GV, TND, Max Healthcare, KIMS continue to hit fresh 52-week highs.
All right, all those stocks at fresh 52-week highs. But, one stock that's on my radar this afternoon is Bajaj Finance, Yatin. The stock has been struggling for direction. There have been, triggers for the stock to stage a good turnaround, but it hasn't really been able to capitalize on them. For instance, the RBI curbs on two of its products was lifted back in May. That was a trigger. Although at that point of time, that stock saw good traction, but it fizzled out. Yeah. Then it had the Bajaj Housing Finance IPO coming out. Value unlocking happening there, but it couldn't even capitalize on that. And then the second quarter earnings came, which were a disappointment, so to say, given the fact that there was weakness in the personal loan portfolio in the rural end of the market, and that kind of weighed down. Also the fact that they had increased their credit cost guidance, which played spoil sport. But today, the management has given its guidance and it's fairly good, which is why the stock saw a good 1% move and came off from its day's lows as well. Profit is seen rising to 20,000 crore rupees by FY29, which is more than double of where it's at right now. 8,000 crore in FY24. That's the kind of profit it saw. Total income is also seen at 3 lakh crore rupees in FY29 vis-a-vis 1.1 lakh crore in FY24. So triple. That's the kind of growth in total income that the company is looking at. Aside of that, if you look at the customer franchisee, it is expected to increase to 13 to 14 crore rupees, not rupees, in units by FY28 and 19 to 20 crores by FY29 vis-a-vis under 10 crore in H1 or the first half of the current fiscal. Now, in terms of cross-selling franchisee, Bajaj Finance has one of the strongest, if you even compare it to some of the largest private sector names. Now, it has an omni-channel approach to lending, wherein it cross-sells its loan products. Now, cross-sell franchisee is expected to increase to 8 to 9 crore rupees by FY28 and 11.5 to 12.5 crore rupees, crores, I beg your pardon, by FY29 vis-a-vis 5.8. So, that's also expected to double in FY29. In terms of the India payments GMV, it is also expected to see good traction. Total credit will also be at somewhere around 3 to 3.25% by FY28 and 3.5% by FY29. The retail credit is also expected to increase to almost 4% by FY28 and over 4% by FY29. So, and the biggest thing is the return on equity metrics. That is expected to be at 20 to 22%, Yatin, which is now currently at 19.4% if you look at the first half of the current fiscal. So, yes, all in all, the guidance is pretty strong. I hope that it turns out to be a trigger for the stock, because it has been struggling for direction. Even on a YTD basis, the stock hasn't done all that well, has given negative returns at a time when the index has seen such a good rally. We've seen a strong name, the strongest NBFC, so to say, sitting out of this rally, and that doesn't really bode well with the street.
Absolutely, and I think the cross-sell numbers, the return on equity figures is something which will keep the investors really positive on the stock, at least for the near term. Asset quality is one risk with credit cost, but I think overall the growth matrix for Bajaj Finance looks buoyant. Apart from Bajaj Finance, moving to new age companies like Swiggy and Zomato. Today we have CLSA, which has initiated a coverage on Swiggy, and to my surprise, they have initiated it with a buy call and a target of 708. Now, if you look at the yesterday's close, it implies a 40% kind of upside from the current market price. The issue which was recently launched, which is the IPO, saw a lukewarm listing, but clearly after the listing we have seen the shares consistently rally, clearly indicating that a lot of institutional appetite still remains for the quick commerce and food delivery businesses like Zomato and Swiggy. Now, talking about Swiggy, CLSA believes that the target addressable market is quite big. They have clearly an early mover advantage like Zomato has, and execution has improved, it has accelerated, and quick commerce is one big opportunity according to CLSA, which will turn the tables for these companies. Now, they are expecting that the Indian quick commerce businesses will grow 6 times in size between the period FY24 to FY27. So, the next 2-3 financial years will be very big in terms of growth for quick commerce business, with Swiggy clearly making a mark with the Instamart food business, delivery business that they have. I think quick commerce businesses now, which gets better valuations and better growth prospects, along with one of the biggest beneficiary being Swiggy and Zomato. Obviously, with Zomato clearly taking a lead in the food delivery business, in the quick commerce business, Swiggy still has a lot of growth opportunities. and that is where the brokerages are quite positive. The valuation gap between Swiggy and Zomato might stay, but yes, from the current market price, CLSA believes that there could be a decent upside in the shares of Swiggy as well.
That's true, Yatin, and we have been getting a lot of reports on Swiggy ever since its listing,
Correct.
right? And of course, some of the brokerages also pointing out that the valuation gap between the two, has stopped really widening, and it will take at least 2 years for Swiggy's quick commerce business to turn break even. These are some of the brokerage notes that I had read. But Yatin, we keep taking Swiggy and Zomato as our stock picks, but you never seem to be ordering any kind of food or anything.
Today also
for me.
we ordered, it was Dimesh's birthday and I only ordered on
Okay.
Zomato, and you also ate a lot of things. So don't complain when
Sure.
you have a lot of food flowing in the newsroom.
Sure, of course. Wherever there's Yatin, there is food. There's no denying that fact. But let's talk about the second stock that's on my radar today, CDSL. That's one of the capital market plays. Motilal Oswal has said that it's the golden era for the Indian capital markets, and it has, in fact, pointed out or shortlisted over a dozen stocks to ride this wave. And CDSL, depository stock, is one of them. It has initiated coverage with a neutral rating on the stock, but the target price at 2,000 implies just a 6% upside from yesterday's close price. That's because they say that the valuations are a little stretched, given the fact that the stock has literally doubled in value on a YTD basis. Now, Motilal Oswal is saying that the company, CDSL, derives 22% of its revenue from issuer charges. That was as of second quarter, and 23% of revenues from transaction charges. Now, these are all dependent on increase in retail participation, enhanced IPO activity, as well as an increase in free float on the bourses. Now, Motilal Oswal expects the momentum to continue or sustain over the next few years. In fact, it's also mentioned that the company is strengthening its market leadership in terms of the number of demat accounts. It has, of course, a strong association with discount brokers, whereas NSDL, its competitor, which is going to list soon, that has an association with institutional investors, right? So that way CDSL is a leader because of its association with discount brokers. It is a market leader with 79% market share, and how CDSL discount brokerages wrench market share from traditional brokers, CDSL will be a beneficiary and of course continue to grow its market share as well. In terms of financials, Motilal Oswal expects EBITDA margin to expand to nearly 66% by FY27 from 60% in FY24. That's despite the continued human resource and technology investments for the future growth. Return on equity is also likely to rise to 42% by FY27 vis-a-vis a 30% growth in FY24. Revenue, EBITDA, PAT, these are all expected to grow at a compounded annual growth rate of somewhere around 31%, 35% and 33% respectively. And it has mentioned that it's a compelling story, but upside remains limited, given the fact that the stock has already seen quite a bit of a run up. In fact, even just a few days ago, the stock was consistently hitting 52-week highs, over 100% returns in this year itself. And some of the key risks, however, have been highlighted as unfavorable market movement, or regulation on annual issuer charges, competition from fintechs. These are some of the risks, even cyber attacks, and perhaps some bit of market share loss, if at all. But also another good thing is that this industry, the depository industry, is a duopoly, because CDSL is listed now, NSDL will also list, but the entry barriers are fairly strong. So the risk of heightened competition actually is not there. So that's about CDSL. A good story, but upside limited from here, according to Motilal Oswal.
Absolutely, and the upside should be limited only because the shares have already run up. But yes, what a phenomenal run for stocks like BSE, CDSL, the exchange stocks, the brokerage stocks like Angel One, Motilal, clearly at record levels as we speak. But yes, clearly the discount brokers or the big online platforms wherein you can trade something like a Zerodha, something like a Grow, companies like CDSL have been clear beneficiaries.
That's true, Yatin. Well, I think with that, we've come to the end of this show. An extremely flat close. Let's see what tomorrow holds. So far, no big moves over the last 3 sessions, but let's see, tomorrow is another day. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.